Well, hi everyone, and welcome to Buffett and Beyond Research Saturday ETF report. And we are talking about trading the dip in our ETF special portfolios. And what we mean by special portfolios are those portfolios of ETFs where we take the top stocks in those ETFs rather than the entire ETF. January 11, 2025. Happy New Year. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. So let's look at the last year's or 2024's returns for our sector all-stars, up 36.4%, and our NASDAQ 100 top stocks, 12 of them, up 47.2%. Folks, this is phenomenal in those returns. But the problem is we're starting off January in a kind of ugly way. But let's take a look at this. Maybe it's not so bad. All right, first of all, let's look at the QQQs. And up here we have a different type of technical analysis indicator, and most of you have heard of it, and it's called stochastics. And there's one thing I want to tell you about this. Notice these declining tops. And we're going to come back to this at the end of this video. And we can see that the QQQs are trending down. We have declining tops here. And today, as I'm recording this, which is Friday, we're having just a pretty ugly day. All right, let's look at the transportation, because remember we talk about the transportation. The transportation really wants to lead to see if the economy is doing well. Now the problem is that they are hitting the transportation stocks pretty hard today, even though we have a buy signal down here and we had a buy signal up here. But what is happening today is that they're selling the entire market, and the problem is that the jobs report came out. The jobs report is very, very good. So that means the economy is very, very good. And the problem with the market is the market says if the economy is good, then the Fed will not lower interest rates. And so the rest of the market is just having a hissy fit. Let's go to the technology sector, and we can see this is why they're having a hissy fit. You look at these technology stocks and look at this declining top in here. This is a bearish divergence, which we got yesterday. So we got this turned down yesterday, and that gave us a hint here with the market closing under this 50-day moving average 2 days in a row. That was not very good at all. And you can see today, as I'm recording this on Friday, it just has turned plain nasty. Intermediate indicator still pointing down here. So we're still having a problem here with the technology stocks. And when we look at the semiconductors, well, it's almost the same thing, except we had a higher high here, which is a nice bullish signal. And the problem is that all of a sudden they are getting hit along with the tech stocks. Because don't forget, there's a lot of semiconductor stocks that are in the technology ETF and vice versa. So there's a problem there. But this intermediate term signal has turned down here. So are we going to stop at this 50-day moving average here, or are we going to continue down? Hard call, but this was a nice signal up here, and we didn't see it as a sell signal, whereas let's go back to the XLK. We did get a sell signal up here where the market went high as it did over here. So we did have this meeting this high, but this indicator definitely gave a sell signal here. All right, let's look at the S&P 500. And what we had here was a buy signal. Problem is that now it looks like it's turning into a sell signal. Again, this is about 12:30, almost 1 o'clock in the afternoon, so this market could come back once the market realizes that, gee, having a good economy is really pretty good for stocks. All they are is worried about interest rates right now, and once that subsides, because what happens with high interest rates is that the housing sector slows down. Housing sector is a big part of our economy. When you think about drainage pipes, when you think about copper pipes for water supplies, when you think about the welds, when you think about the air conditioners. So there's a lot of trickle down here. But this gave us a buy signal, and now all of a sudden it may be breaking that buy signal in here. Again, we still have the afternoon to go. And are people willing to hold on to stocks going into the weekend? That is the big worry here. If this was happening on a Wednesday or even a Thursday, we wouldn't be so worried. But right now, boy, Monday is usually a weekday, and if we close down today, Friday, and if it closes down like it is here, that means it's breaking this bottom. But it looks like the market wants to come back a little bit. Still, we have a down signal here on our intermediate term indicator. Now, let's look at this report. Now, this is a test portfolio, and we do different things in it, but this is from last week, and we had $155,000 in this portfolio, and the option part of it was about 33.7%. And the profits in the stock were 66%. Now, this portfolio is our QQQ portfolio, where we have about a dozen stocks in the QQQ. So it's an actual portfolio, except we try different things in it at different times. So we didn't do this in our real portfolio, our real QQQ enhanced portfolio, because we didn't use the options like we did in this test portfolio. Now let's look at this one more time here. And all of a sudden, here we are as I speak, as of like a half hour ago, so midday, we are down only to $153. Let's look back. We were at $155 last week. We are at 153 this week, which is almost no decline at all, even though the QQQs are down 2.2%. Well, how come we hardly lost any money at all? Because we bought some puts on the SQQQs. So if the market goes down, SQQs go up, and we were able to buy some puts. And therefore, so we bought some puts on the QQQs, and therefore, during this decline, we were able to gain money there. Now, why did we do this? We didn't do this because of the things that I saw, and we didn't do this in my real portfolio, but we did do it in this test portfolio, and here's the reason why. Because when we looked at this particular ETF here, we saw a declining top in this stochastic indicator. So here is this black line right in here. Here is this black line right in here. And we can see that this black line is a little bit higher than this black line, but the indicator is much lower. That just gave us a plain old sell signal, and we still had this indicator pointing down here. So therefore, we thought this QQQ was going to go down. And when we look at the SQQs, which is the opposite of this, we thought the SQQ was right in here. Now, here's these two lines. And we have the red line in here and the red line over here. They're about equal, and these 2 points here are about equal. So that says, gee, we're just not sure. But down here we had a buy signal. Now the SQQ is an inverse ETF, so it's inverse the QQQs. The QQQs is the NASDAQ 100. So therefore, this was telling us this could be a sell or buy signal in here, which is a sell signal on the market. And these two lines back in here, this red line and this red line, they went down, and this did not go down any further or up any further. It was about even. It's actually up a little bit, which gives us a tiny, tiny buy signal. But then when we went back to here, which I just showed you, this was definitely a sell signal in here. Now, I didn't find this. One of the trading friends of mine were talking about this, and they said, look at the stochastics on the QQQs, and what do you see? And when I looked at it, I said, oh, okay, this doesn't look too good. Declining tops in here, declining tops in here. And so with the QQQs, we have a sell signal in here, folks. And so that's what gave us the impetus to go ahead in this test portfolio. In this one, where we only lost less than a 0.5% because we had these puts. So that's what you can do if you're sitting here all the time, or you have some trading friends that are at the computer most of the time. Now, the traders love volatility, and so they love a day like today. And that's why I was talking to my friend, because he called me and he says, okay, we're getting a lot of volume in here. We're getting a lot of volatility. And when we're happy, normal people are happy, it's when the market's not doing much and our portfolios are just gaining a little bit at a time. But the traders love it when it starts getting volatile, and they find little things like this. I wish I did put it into our test portfolio, so I'm happy we did that. But would I have done that on my own? The answer is no. So, folks, we're having a tough day out there today, and we're not sure what Monday is going to bring. So we're going to leave those puts on that test portfolio, not on my own portfolio. But if Monday is a bad day, then we will very probably be putting on some hedging on our actual portfolios out there. So we'll take it easy over the weekend, and we'll see what Monday brings. Right now, we have to see how the market closes, and of course, we can't do anything after the market closes, and therefore, we'll just see what happens on Monday. So, folks, you go out, you have a nice weekend. This is the beach that Jimmy Buffett used to walk on. This is sunrise down in Florida. So, folks, you take it easy, be with your family, be with your loved ones, and we'll be back here in a couple of days.